Hello, this is Alexander Green, Chief Investment Strategist of the Oxford Club with another market update. And just so you don't miss any of these, be sure to become a subscriber. And that way, anytime there's a new video out, we'll let you know. I want to talk today about something that's very important to all investors. Investors think a lot about what they're buying and why they're buying it. The other part of the investment process is when do you sell? And that's a much trickier part than buying because I think a lot of people look back and some people say, oh, I should have bought this stock. And then, of course, another common reaction is I should never have sold this stock. So, how do you know when to sell a stock? Let me begin by saying that a lot of the highest flying stocks of the last several months or even last year underwent a serious correction in early March. By the end of the first week of March, the NASDAQ was actually technically in a correction, which meant it dropped more than 10% from its high. And a lot of people who've been chasing the hot stocks felt burned because there was a rotation out of the hyper growth stocks and into value stocks, which have an excellent outlook now that the economy is beginning to reopen with the rollout of the vaccines and the economy reopening. So, how do you know what is the best way to sell? Well, let me just say that one of the first things you don't want to do is just guess. A lot of people say, if I feel like it's reached a point where it should be sold, but if just because your big toe is aching or your gut tells you it's time to sell, is not necessarily the time to sell. You need to follow a discipline that's not based on emotion, but is based on reason. And not only is based on reason, but is based on the fact that no one can tell you with any certainty, certainly not accurately at least, what the market is going to do. All the corrections and the stumbles and the bear markets that come along from time to time, as they always have and as they always will show up unannounced until you look at your screen and see all that red and you realize that the market's coming down. So, what should you do as an investor? Well, the Oxford Club follows a strategy of using trailing stops. Now, most of you who are Oxford Club members or regular readers or viewers of these videos know that the way a trailing stop works is, for instance, if you're using, say, a 25% trailing stop and you buy a stock at $20 a share, as soon as you get your order filled, then you immediately enter a stop loss order, it's often called just a stop order, 25% below your purchase price. So if you bought at 20, that'd be at 15. Now, of course, you hope the stock doesn't go down to 15. You want it to go up. But if it does sell down to 15, you've cut your loss at 25%. The idea is to never let an acceptable loss become an unacceptable loss of 50% or 75% or 90%, which can happen with stocks of companies that perform poorly. So the idea is you've got strictly limited downside risk and unlimited upside potential. And I mentioned in another forum this morning that I was playing golf with someone just this weekend, and he was saying that he was so proud of himself that a year ago when the market melted down, he stepped up and bought all these great companies. And now he was kicking himself because 6 weeks later he had a nice profit and he sold them all. And the problem that he had was he didn't have a sell discipline. He just thought it was a good time to sell before the market went back down. People start to imagine various scenarios as if they're bound to occur. So I want to emphasize that just as you want to have a set of criteria for what you buy, you want to also have a set of criteria for when you sell. That's really all I want to say about trailing stops for now, but I do want to encourage you to tune in to a webinar that I'm a part of that's coming up. And we're going to discuss in great detail the different types of stops you can use because some stocks are more volatile, some are less volatile. Do you run the stops closer? Do you run them further apart? And that's exactly the sort of thing we're going to discuss. So again, this is Alexander Green, Chief Investment Strategist of the Oxford Club. And I, again, encourage you to sign up for this webinar on how to maximize your returns, not just by buying right, but by selling right. So do please sign up on the link below. That's it for today. Thanks so much.